Nick with Us versus Herd. I want to talk about some short-term, medium, and long-term trading strategies for options. A lot of people say, hey, if I don't have a lot of time, how do I trade? Or how do I make money quicker? And I just want to go through. I'm going to use Goldman Sachs as an example. They recently had earnings, but this is something that one of the ways I've deployed a strategy on how to make money short-term, long-term. If you have a directional bias on the stock, of course, and of course you have to have the right setups here. So looking at Goldman Sachs here, as you can see, since March, it's been on the decline. They had earnings and it went down even more. And then I started putting on position. Actually, this earnings was a couple days ago and it didn't move at all. So I'm just going to go over that. But this looks like it was on its butt down here. So I figured I'd get bullish. Goldman Sachs, and this chart is starting to work out pretty beautifully, and I've already closed out some positions. I still have some on, so I'm going to go over that with you. So for short-term trading, what I did I have all my trades right here. For the short term, what I did on earnings, I actually sold a put spread. I sold it down here, let's see, at 716 for $1.39 credit. And I actually that was for earnings, so I sold the 232.50 put and I bought the 230 put. So if you don't know what that is, it's just a defined risk trade. When you sell a premium, it means you're bullish. If you buy premium, that means if you sell a put, that means you're bullish. If you buy a put, it means you're bearish. So I sold this for $1.39, so I got $1.39 credit, and then I bought it back. Let's see what that was, the July 20th. As you can see, I did a couple things. So I bought it for that, and on July 20th, I bought it back for 76 cents. So when you're selling premium, you want it to go down. So I bought it for $1.39, or sold it for $1.39, and bought it back for 76 cents. So almost a 50% profit on that. But I did that twice. So the short-term strategy, that was when I'm laying in the trade short-term, I start off with selling premium before buying premium. The reason why I did that was earnings. The IV rank was fat. I don't have the study on here. Let me get the just to show you the IV rank here. Oops. The implied volatility. Yeah, if you don't know how to do this, you can show the implied volatility in Thinkorswim for those days in the studies. You just got to go to implied volatility and we'll show it here. So as you can see, up into earnings, it was higher than it is now. Right now, single digits, and so I put the trade on right in here. Earnings was in its 20s. It was still low, but for as compared to now, if you look at Goldman Sachs here, is only a 5.5. So I start off when I'm looking to get a position, especially something like this directional. Your odds are better of selling premium versus buying premium, because for selling premium, you don't really need it to move that much. You just need the premium to go down. That's pretty easy to do. But when you buy premium, you need it to go the direction that you want to go. And this is just kind of thankfully with options, there's a lot of flexibility in the way that you can do trades. Yes, you could buy premium, you could sell premium, you could do defined risk, you could do undefined risk. So that's what I like about options. There's so many choices, and there's so many ways you can make money. However, you have to apply the right strategy when you're placing these trades. You can't just go in on anything and do vertical spread on whatever you want or buy whatever option you want, because any trader, new trader, seasoned trader is going to know you're going to lose money. New traders know that they lose money all the time when they just kind of gamble their money away. So when doing short term, I start off with selling some premium, and if that starts going well, the reason why I put on when I started buying premium, because the IV rank was a 5.5. I think when I started buying premium, that was like 6, so it came down a little bit. And we're single digits premium here, so it's not real rich when you're trying to sell premium. But I really think we had a very good direction going on here based on the chart. I really think that it was going to hit 250, maybe 260 in a couple months. So then I'll start projecting long term. But for short term, what I did was I thought it was going to hit I started selling the premium here, and I actually sold. So I sold that to July 20th, and then I actually did the same trade again. So when earnings happened and it didn't move a lot, and I was making some money, I actually sold the same strike again, but a week later. So I have the July 20th here, and as you can see, I've got a $1.42 credit for the same trade, but for the next week expiration, which I closed that out for $1. So I opened at $1.42, and the July 27th. Let's see, 69. So we actually made 50% profit. So between the two trades, I made 100% profit on those vertical put spreads. So, double my money with those small risk trades. So, the most I could have lost was like $125 on both these. And, we got some pretty rich premium and some pretty great decay, because as you see, it was in the 20s. Now it's down in the single digits. We made some good money doing that. And then as that was going well, I put on a couple more trades here. I actually started buying the 240 calls here because I thought I was going to hit 240. So I started buying premium just because it was so cheap. So this is another short-term example here. So for July 27th of this week as well, I put these on actually last week. And I bought a couple here in the 40s, and then it went down a little bit. The stock went down. So I bought some more at 30, and I think my average round was like 35. And I sold them today for 53 cents. So, my average is 35. I sold them for 53, all of them today. So we made about $60 gain. So we made about an 80% profit on that. And then for the long term, where I did long term on this, because I'm overall bullish on Goldman Sachs, being that they crushed earnings and the chart is just playing out the way that's playing out. Yeah, there's a lot of things in the news and everything like that, but when you're buying premium, you could buy further out, mainly because the theta is not going to eat that much. So those are a couple short-term strategies there. But the long term I bought the 255 call for November, so 115 days out. And when once like premium sellers, once you get into like the 30-day range or the 60-day range, theta really starts to eat this if it's not close to your strike. But you can make a lot of money if you buy, out of the money pretty far away. Obviously if you're getting a good deal. And IV rank was so cheap. I don't even need, if let's say for instance, I don't really need it to go to 255. Let's say the IV goes up to like 30. The option's going to get more expensive no matter what. Even if it goes down a little bit or it goes up a little bit, I'm going to be making more money because of the implied volatility. We're not making the option prices inflated. So you can make money that way. So this is more of like a long-term strategy. I mean, I do hope it goes to 255 and beyond. At the rate that it's moving these last few days, it's gone from 229 to 235, which for Goldman, that's a pretty big move. But what I like about this trade here, so it went from 260. They're now worth 365. So we made that's about 35% on it. I put it on. Let's see. We put this trade on 7/17. So 5 days ago, 6 days ago, business days. So we made about $100 so far on this. That's the only position I haven't closed out yet. I closed these other ones out because these are the short-term trades, and then I have this long-term trade. For medium term, you could put something off in the middle. Obviously, you can go out to medium. It'd probably be more of like a September is what you'd want to do. I don't have a position currently, mainly because I was so heavy on these front months, and then I have November, that I'm really not trading this. I'll just be trading this, and maybe if it goes down back down to 230, 225, I'll sell some more premium, because when it goes down, usually implied volatility goes up. So then I'll sell some more premium that way. So as I'm waiting for this to come to fruition, this trade here for the November, as I'm kind of waiting on that, I'd like to make a little bit more on this. I have my profit targets, probably sell this around 255. It really depends on when it hits and how soon it can hit, and then I'll reevaluate. If it looks like it's not going my way, if it looks like it's going to go back down, or the market's going to take a turn or something happened, I'll definitely sell some calls for that. I won't buy puts or anything like that. I'll sell some calls. So these are just some different strategies that you could use to when selling options, short term and long term, and kind of in the middle medium term. I would guess you'd say this November one's kind of a medium term / long term. Long term, if you want to go out to like June 2019 or January 2019, these prices, the IV rank's pretty low here, so you can pretty much buy these if you believe in the stock and if you want to invest this much money. When I buy premium, I always try to get a good deal on it, and IV rank of 5, you're going to get a pretty good deal if you have a good directional play here. So if you have questions, I know that's a lot of information. You're going to probably have questions. Leave a comment below. First time coming across the channel, hit subscribe, like the video, and follow us on our social media channels. I have those links below. We do a lot of stuff on Instagram, a lot of IG stories about our trades over the day, and YouTube we don't get a whole lot of a lot of those trades don't go on YouTube. So follow us on Instagram, and you'll see a lot of those stories, and hit that subscribe button.